Details believe that this financial rescue plan was likely to disappoint this market. Does what you've just heard change your view at all?
It does not. Actually, I am increasingly concerned that we are not going to get any final clarity about what will happen with the U.S. banking system. The main problem is that there probably will be disappointment in terms of no bad bank, which would be needed to provide ultimate clarity. I'm happy to hear big numbers, 1–2 trillion, but they are so contingent on whether the private capital will want to step in. And again, if we don't get enough details on how the capital will be incentivized, the markets may end up being disappointed today.
So it's really all about transparency then in terms of this financial rescue plan?
It's really important for the markets to have a clear path to how enough new capital will be injected into banks and what will happen and at what cost to the toxic assets still present on their books. And it seems to me that the clarity will not be there. As long as there is too much uncertainty, risk aversion is going to rebound.
Dariusz, I wanted to bring you over back now to the stimulus package that we did, of course, hear from Barack Obama a little bit earlier on today, talking about that stimulus package. Now, you also believe that this package itself is going to be a disappointment to the market, and that's simply because of the speed at which it's going to be enacted.
Exactly. There still may be some details that will be amended before the plan is signed by the president, but what we see right now is that in the year 2009, only about a quarter of the funds that will be put into the package will actually be allocated in the economy, and a lot of it in tax cuts, of which some will be saved. So the incremental increase in GDP growth rate will be only about 1 percentage point this year, which means that the economy will probably contract by 2 percentage points. Still a very dismal result, and we will have to wait until 2010 for a bigger impact of the plan. So in the near term, clearly another disappointment.
Dariusz, clearly, as Steve said, we don't know right now whether we really do have enough information from the US government actually to make a trade. In terms of asset allocation, what are you doing right now?
I believe that in the short run, the response of the government will not be welcomed by the market, and therefore equities, commodities, pretty much any risky asset in the short term has to go down in value. On the other hand, treasury bonds, after being sold very heavily over the past few weeks, seem very attractive, and so does the dollar, because if equities do go down, capital repatriation to the US will resume. It's only in the medium term, starting perhaps late in the spring, that I believe equity markets will begin a more sustainable rally. But in the short term, it's too early to jump in.
All right. Okay, Dariusz, thank you so much for joining us today. Dariusz Kowalczyk with me there, Chief Investment Strategist at SJ.